up. FTSE is again moving to the upside. Really interesting moves again in the FTSE, which we'll come to. And I'll make that clean. Right, so I suppose good morning. Good morning to you, mate, and good morning
Good
to
afternoon to me. Good morning to you.
Oh, is it? What time is it where you are?
I'm buggered if I know. It's not far from getting dark. It is 4:30 or 24 minutes to 5.
Oh, okay. Oh, this really is a great time for you to trade, isn't it?
Perfect, mate. Yes,
God,
absolutely.
anybody living in is that Australia time, or are you on a slightly different time zone? I know some countries have like 2 or 3 time zones.
Yeah, we've got 3 time zones, and then we've got Tassie time as well. But I'm in Australian Eastern Standard Time.
Yeah.
And I'm a
EST.
little bit to the west of that, but the next zone doesn't cut in until the South Australian border, and that is Central.
Right.
Standard
Okay.
Time.
So so are they all within an hour of each other?
Half an hour from
Oh, okay.
Eastern Standard Time to Central Standard Time, and then another hour and a half from Central Standard Time to Western.
So actually, Australia would be a great place to trade the UK market.
Mate, it is absolutely.
You could
You
do 2
bet.
jobs. You could work until 5, get yourself home, and start trading.
I think a lot of people might even do that, mate. Yes, absolutely. It's the way to go.
I think I might move. Well, we were just talking about
You could
how.
do work.
Yeah, just talking about how these markets have been trending quite a lot recently, but they seem to have like stopped out a little bit, haven't they? Start of January, start of the year. I mean, this is the dollar yen start of the year trending. I guess trending, but this period here is a little bit more tricky, isn't it? Because really, if this was still trending, it'd be moving to the upside from somewhere around this point, or maybe down here. But it's a little bit a bit scruffy.
Yeah, look, I've been saying this for a while on dollar yen. The last couple of weeks, I rarely see dollar yen pause for this long at a level. It normally, if it's trending, it'll normally take off. If it's not trending, it'll normally reverse by now. It's trying to do both, but
Yeah,
it's stuck. It's kind of stuck, and
yeah.
I kind of get that because the world is kind of stuck too, waiting on Trumpy and Xi Jinping, waiting on whether Pooty and our old mate, what's his name?
Kim Jong Un.
Yeah, Kim Jong Un. That's right. What they're doing, what Brexit's going to do in a few months' time. We got the Fed today, so yeah, I kind of get it.
Well, we continue to be trapped with the FTSE, and I suppose indicative of these markets. But this certainly starts to look like a head and shoulders pattern. But these bars that we've had the last few days been vicious moves to the downside, and then pop straight back up again. I have.
Yeah. It's like a bungee cord, isn't it?
Oh, it's been crazy, and actually there was a little short that I had on here which I've managed to now get off, which is a good thing. But we are now in a little bit of a quandary about which direction to go in. I have to say that the long bias looks slightly more likely at this stage, and I'll show you why. Not really the weekly pivot just yet, because the hourly bar hasn't closed, and it's going to be interesting to see what happens in the next 20 minutes. But this little line here, I think, is really interesting and possibly quite telling, because we've just poked through it, and it looks like we might well get a close above that particular point. The daily pivot is also interesting, because what will happen, I suspect, is the potential, and this is where the slingshot becomes a lot more mindful for me. Some of the ways that you read these bars, which and this is why I give you so much credit for your angle, because people just don't think this way, and I never thought this way before.
Nobody's
But it's
ever thought like me ever.
no, but you know what? It's a important view of how these markets work, because if we get something which closes beneath here, my first thought now isn't that we're going lower. but that this point actually might be attacked again. And I have to watch really the next bar before I'm convinced whether we go lower. You know, almost maybe it'd be obviously a lot better if that happened more like that. So that would mean that we could either get a test of this point or this point, and then we know if we get a test of this point, the likelihood is higher that we're going through at some point.
Yeah, that's
you know,
classic me, isn't it? Yes.
yes, it's absolutely, and I think you know, everybody should be mindful of the fact that that this can happen, and only, I have to say, trading the slingshot could give you this kind of view of the markets, and it's such an important view to have, because all of a sudden it kind of gives you a little bit, you know, that little bit more clarity, because you know, two things can happen here. If that was to happen, then obviously we're looking for lower, and lower would suggest to me that we're back at weekly pivot levels. You know, possibly trends continue, but I wouldn't really look for necessarily trends to continue until that FOMC. But that would suggest that a test in this area would take us somewhere down here. I'm not sort of saying that there's only going to be 3 bars, but if that wasn't to happen, and that was to happen, then my next kind of anticipated move would be more like that, and I'll be looking for the long side. So these this cluster could be quite interesting. You know, the next bar, the next hour could be quite interesting, depending on what happens here. Of course, if this ends up being a shooting star high test bar kind of look about it, then everything changes. All the analysis on that changes. But for right now, you know, where price action exists above this trend line, forget the weekly pivot, then my suspicion is that that price action is probably more likely to take us higher at some point today.
Yet you have a look at the stats on breakouts, and you've probably got 2 levels that you're breaking out. One's the trend line, and the other one is the horizontal level, and the other one's the weekly pivot, I suppose.
Yes,
so,
yes, yeah.
You know, when you look at the stats on breakouts, they're pretty poor, because most of them are not follow-throughs. They're false.
Yep.
And that's where my strategy comes into play. It likes to play those false breaks.
Absolutely. So you would actually well, this is I suppose this is the point here, is that where people would be getting into a breakout early, the lovely thing about the way you do it is that you wait for some confirmation, and that confirmation comes from the retracement, and then with an entry above the breakout bar, if you like, which I really like.
I call it my insurance policy, because if they're not coming back there, then generally they're going in the opposite direction, and I won't be taken into a bad trade.
Yes.
And then I might get the added bonus of being able to get into the short.
Yes.
So it's kind of an insurance policy that I've used to good effect. I think it's kept me out of bad trades many times. Just simply by waiting.
I think the thing that you said there is the key aspect. Keeping you out of bad trades is the important factor. You allow the story and the picture to unfold that little bit further, which is such a good lesson. And you know, I don't know how you impart that. There's so many aspects to trading that people need to learn, and staying out of bad trades really is the key, because when it comes down to it, we can all enter good trades. You know, entering a good trade to a degree is quite simple, but staying out of bad trades is probably the real trick of the game.
Yep. And guess how I learned that?
Oh, lots of bad trades, no doubt.
Yeah, it cost me money. Absolutely.
Yeah.
So, you know, if you value your account, and if you value your capital, then you either listen to somebody who's done it, or you do it yourself.
Yeah.
So I highly recommend that you listen to somebody who's been there, done that, and save your own money.
Yeah, a lot cheaper, isn't it?
Yeah, look, breakouts, as I say, the majority of them are false.
Yeah.
And yep, you're going to catch some good ones. There's no question about that. But the ones that you don't catch are going to cost you shitloads of money, and that's the issue. If you can balance it out in positive territory, go ahead.
Yeah.
But that's a very fickle game to play.
Yeah, completely agree. So really, we're in a little bit of a hiatus point here with the FTSE, and you know, the S&P continues to confound me somewhat. We had further breaks to the upside on the S&P. Let's bring in a longer term time frame here again. But the S&P continues to make new highs, and looking at this on the weekly chart, we are now beyond this point after yesterday. Pretty poor numbers from China. Fairly poor numbers from from the UK, as sorry, not the UK. Poor numbers from China and poor numbers from America as well, which we'll quickly have a look at.
Hi, Mohammed. Yep, mate, you've got it. You got the nail on the head. That's where you make your money in forex trading, by staying out of the bad fellas.
Yeah, absolutely. So manufacturing PMI from China was an ugly number. A fair miss, but as Jeff pointed out yesterday, that the real key to this is the fact that it's only really 0.2% above contraction. If 50% is break even, then it's 0.2% above contraction. And then we come down here and look at the Chicago PMI from the United States, also a pretty bad number. Business confidence, consumer confidence, however, consumer confidence, was a decent number from the States. But what was really driving this market was the fact that, in my opinion, FOMC are likely to act dovishly, and bad Chinese data probably, I think people assume, will provide more stimulus. So even though the numbers were poor, it may well point us in the direction of a further stimulus coming from the United States and China. So we'll have to see whether that unfolds today, whether it gives us further upside. But and let's have a look what we got. So up next we have not much going on. Bank holiday in Europe and bank holiday in China. But it really starts to pack up, really starts to get interesting PMI data from the United States just after the United States Open at 3 o'clock. FOMC is what everybody's watching and what everybody's waiting for.
You could be forgiven for thinking that we're not going to see too much until the US session today. It may be quite open to, well, I don't know. You guys are still at work, aren't you, in London?
Yeah.
Okay,
yeah,
so
we're at work.
We've got traders at their desks. But, you know, we do have FOMC. And I said this yesterday, and I was completely wrong in most instances. And maybe it's cost me a few bucks as well, because I did stay out of a few things I wanted to get into. I said that we would be probably in consolidation until the FOMC statement. And, you know, quite the reverse happened, as I say, on a couple of crosses. We had a fair bit of movement.
Yeah, well, the FTSE's had some significant moves, but you know, as I say, the S&P is a really interesting market right now. It continues to make fresh highs, even off the back of poor news and data. I suppose the whispers about
this is a familiar story, actually. I got to go back to 2008 when this just continued to happen. We continued to get new highs in the face of all sorts of problems.
Yeah,
and it just kept happening until bang.
Yeah,
and I'm not saying it's going to go bang. Please don't get me wrong, but
yeah,
I've seen it before. Wouldn't be the first time.
Yes, well, this is the thing. I mean, the question really right now is what's going to take this lower. I mean, I look back at the FTSE 100. You know, coming back to this this particular market, which is the one I trade, and really, when you look at the FTSE 100, you have to compare it to the Dow Jones rather than the S&P. It's much more closely correlated in price action and the way it looks than the S&P, but the Dow Jones also making a case for trying to get fresh highs as well. So the Dow Jones yesterday had a run to the upside. The S&P had a run to the upside. The Nasdaq had a run to the upside, slightly more caged than the other two. Nasdaq had some fairly poor numbers actually from Alphabet yesterday. So again, you know, those earnings have been taken on board when they have been positive and people have been buying it up, and when they've been negative, people have been sweeping them aside and buying it up. So it just goes to show that that there are other things at play here. The FTSE 100, as I say, is a tricky market because this is providing us with a reversal pattern in a way. It's a little bit, it's got a little bit further to travel, and it may well be that we get caged in this point. or we might get a breakout. Considering the rest of the world markets, we might start to get a breakout to the upside. But for right now, it looks like it may well get caged. I think maybe, as you say, Jeff, maybe a bit of drifting today. But by the same token, it wouldn't surprise me at all to see this start to stretch its legs back to the high before that FOMC statement, and maybe even before the Chinese data. So we really are on a bit of a on high alert here to see what happens in the first couple of hours. And this brings us back to this chart, because even though we could potentially get something that looks like a reversal bar here, unless this reversal bar closes under this point in the next 9 minutes or 8.5 minutes or so, then it's not going to suggest to me that we have got enough weakness to take us down to the daily pivot.
It's still a break above the trend line, isn't it?
It's a break above the trend line, and this is where bars have to have context, and where bars do have context, because this, even though would look like a potential reversal, we're going to need further information before we can trade it, and that further information is another bar that closes below here, or a bar which holds above the point. So we don't really know a lot really right now, but huge moves in the FTSE yesterday. You know, it was it started on this particular bar here. So we started the day moving down, then we moved back up to the trend line, then we moved all the way down to the low again, and through the low actually, and by all intents and purposes it looked like we might start to break down off the back of PMIs, but it wasn't PMIs which is being focused on yet again. It's probably the Fed. I mean, you know, FOMC, you can't say for sure that that's the case, but it looks certainly that was the case yesterday, which is why I cancelled the short down here, because then it just started to fly back to the upside. So we're probably in a little bit of a range, or we're potentially in a bit of a range. Maybe with Europe being on the bank holiday, that might also provide us with evidence that we've probably got a range here. But I'm not going to call that because of the break of the trend line. We're in a really difficult area here because of the break of the trend line, because of the pivots. You know, if you were just looking at this chart and you hadn't drawn that trend line in, this looks to me like weakness would ensue, and it's really important, I think, from this point not to bring in a short-term time frame, because a short-term time frame, like the 5-minute chart, for example, will provide us with a slightly different picture, and probably suggest that if we get through there.
Sorry, I'll kill that.
That's okay, mate. We get through there, then we're probably moving to the downside. But as I say, the trend line is going to be king here, and the trend line is going to be the line that we're going to have to look out for before we can really trust anything. So that's where that exists. And when we bring the 5-minute chart back again, then we can see that this area here might get taken, and then we start to bounce from this point. So I suppose the only thing we could possibly trust is if we take out these lows. Or have more likelihood to trust, we could take out these lows around about 73.98, probably 96. But if we don't take out the lows, then I wouldn't, as I say, be surprised at all to see this market push higher rather than lower. Bit frustrating, you know, I have to say, mate, it is kind of frustrating, because the market has still given us no relief. It's given us no pullback whatsoever. What I did say yesterday was that if the market closes the month with a fairly positive looking bar, and this is that positive looking bar, then any retracement would be something that I'd want to trade to the upside. There was a chance, of course, as the bar closed, that we could actually start to break down yesterday, specifically as the market started to break down, and we ended up with some sort of high test, which would have suggested to me that we were going to get something significantly lower. But for right now, traders seem more than happy to hold on to this, and that looks to me what's going on.
It is a tricky chart, though, isn't it? You've got a lower low,
yeah,
but it hasn't gone to the trend line, and then you've rallied straight away. Why? Crazy.
Yeah, absolutely. Well,
reversals off nothing really.
Yeah, in actual fact, when you look at it in more detail, it did reverse off something, because this little pattern over here gives you that reason.
Yeah.
You know, so and
But
it's a
even so, there's a confluence area a little bit further down on the trend
That's
line.
right.
You're still expecting that to get hit.
Absolutely,
but as you
mate.
say, you've got what I call the trumpet. You're expanding pattern there.
Yeah, well, this is a broadening pattern. To give it its other term, and hideous patterns. I hate broadening patterns, because they can go on forever, just creeping forward and creeping forward and creeping forward. You don't really sort of like have an area to aim for, because it can just kind of like hug this line.
Yeah, we used to call it the trumpet.
Yeah,
and I was taught to stay away from the trumpet.
Yeah, I think that's that. Well, I mean, in most cases that would be quite wise, but I suppose because it's a monthly chart, it's impossible to stay away from this right now for me.
Well, the cool part is if you can pick where it is and trade it back to the other side of the trumpet, you're doing okay.
Yes, absolutely. Well, and this is what, as I say, this could happen. The S&P is making fresh highs. The Dow Jones Industrials are attempting to make fresh highs. The Nasdaq's making trying to make fresh highs as well. Why shouldn't the FTSE get a chance to get up here? And it may well do. It might just grind its way forward. So the picture needs to unfold. There's obviously lots of twists and turns on the way, but a trend which has been so far completely unrelenting, to the upside. We haven't really had any indication that this is slowing down, and it's going to take.
As you say, frustrating.
Yeah, and it's going to be something, isn't it? As you said, 2008. It just happened out of nowhere, and it might be something like
that. Had you ever heard the term subprime mortgage before?
Oh,
that
yeah,
time?
yeah.
You had
Oh,
heard of it?
not before that. No, not before that. No, that was new, wasn't it? Yeah.
Yeah, where'd that come from?
Yeah, absolutely. Yeah, everybody's enjoying those times. You're absolutely right. I mean, I suppose this time it's probably more likely to be some unseen spat between Donald Trump and someone, whether it's North Korea or China. That's what's and this is the thing. North Korea and China have been the reason that we had this move and we had this move. Both those two elements. If, in fact, and the common denominator is Donald Trump. Now he has been pretty quiet recently, and it is a tricky chart. This potential head and shoulders suggests that there's going to be a few more days here before we start moving down. June tends to be the weakest month for the FTSE 100, so we got to look into that. But that's a whole month away. May tends to be a little bit of a 50-50 month. That the sell in May, walk away thing is a bit of a misnomer. So we just got to sit tight and see what reveals itself at this stage. But if you're going to have a bias, the bias at this point has to be for the upside. As difficult as they look, it's got to be for the upside.
Okay, well, we'll stick with that. I don't know that I've got anything more encouraging in terms of getting into the market immediately. I suppose we can talk about the possibilities, and we'll have a look at a few currency pairs. And then we'll come back and have another yak about something else, I suppose. Do you need to look at the open?
No, mate. No. It's not necessary. You go ahead. Let's pass you over and see what you got.
Okay.
I'll give you the screen.
Happy days. All right, where am I? I'm on. This is the one that got away from me. I know a lot of the A2W group have the trading group have traded this, and what a shame! What a shame I missed. I just couldn't find a way in, unless of course I'm up at 4 o'clock in the morning, where we did get a signal. I missed this entirely. Although had we done that, we would have got smashed out by this candle. Maybe don't know how it formed. To be fair. Yeah, you still would have been in the trade, so it wouldn't have been a good result. So just no way into that. This is Aussie Kiwi, by the way. We've been waiting on, or I have been waiting on a signal to get into that. Minimum retracement as far as I was concerned, and what I was waiting for was that deeper retracement down to 105.30, I think, as I've got it here. Didn't quite make it, and there you go. The news has driven it straight up to the weekly pivot. If you're in that, happy days, you're doing well. If not, like me, then you've just got to wait for the next wave. It's as simple as that. One that we are in, and we took this one yesterday, is Euro Pound. And we're in phase 3 of this one at the moment. So we've banked twice, and I've actually entered the trade twice. I'll get rid of all these numbers and things. Come on, come on, come on, come on, come on, come on. I don't know why that does that. Come on. There you go. So entered this trade twice. We traded this bar here, which was a brave move, really, given that I'd already seen this bar starting to work and had already taken out the high. But my contention was, and still is, of course, that we had a double top here and a lower high. It was a risky trade because we hadn't come back to the trend line. This goes back to what I was saying to you, Ash. I can't see my screen on the broadcast. Wonder why.
Let's see.
Let me try.
Yeah, no, we haven't got your screen.
In the words of Frank Sinatra, let me try again. That should have rectified the situation. Although I can't as yet see it again. There we go. All right. So, like I was saying, on Euro Pound yesterday, we took this in the morning TTR session, and we traded this bar here as a lower high. And as I said at the time, it was risky because we'd already taken that high out, but I considered that to be the lower high that I was looking for, despite the fact that we hadn't come to the trend line. And as I said, Ash, that's the same scenario that you're finding on the FTSE. Not coming back to the area that you expect it to, where you're looking to trade.
Yeah.
And fortunately for me, I guess I got on top of that. And as you can see, I entered here, and I entered here as well. So I traded that twice yesterday. When we got the pullback, I thought this would go again, and of course it did. Taken profit here and taken profit here. So
Nice.
all is well with that trade. If you're in this trade, I've moved my stop to entry. Well, it doesn't look like I'm at entry there, which is crazy. I'll check that anyway. I'm just going to let this run now, and I do think that it's got a strong possibility of going places. It's very similar to what I traded Euro Pound in February, and we got a big result out of that one. I'm hoping this is going to be exactly the same. In terms of a target area, I've got the red line down here just to remind me that I need to be very, very conscious of that area. I think I'd probably be prepared just to trail down to that area. It's another 80 pips away. If we get down there, I'll just probably tighten my stops very, very closely in case it does come back on us. But as for now, I'm just happy to stay in that as we see it. Clearly, we're also at yesterday's and last month's monthly pivot area, which could provide a bit of a bounce point. If it doesn't, then I think this level is pretty much a fait accompli. So that one looking good. If you're not in it, I don't think I could counsel you to think about getting into it at the moment without that retracement that I just spoke of. And if that is to be the daily pivot, which is the obvious level, there's probably a level above it, round about there somewhere, that you might be thinking is a really good place to get into this if you're not in it already. So
if that trend line was tightened up, would that give us the same number? If it was, yeah. Oh, it's way off, isn't it? Well,
it's a ways away.
Yeah, it's a few days away, isn't it?
Yeah, I don't see any other confluence, but this area is a good candidate, I suppose, if you are looking to trade this short.
Yeah.
The obvious next good candidate, of course, again, is the trend line. And again, I don't know that I'm that fussed because we are tending to miss trend lines at the moment. So If you do see a reversal here, I would be okay with trading that short. Wouldn't have a problem with it. When you come across that situation, it's a good point to talk about. When you come across this situation where you've got an area that looks as though it might be a nice bounce point, and you've got another one just above it that looks like an equally nice bounce point, or maybe even a better bounce point. The way I approach that, and I won't be doing it on this occasion because I'm already in the trade, but if I were to scale in again here, I would scale in at a minimal level, a minimal stake, with the thought process in mind that it's a just in case. I call it a just in case trade. And it's just in case it goes on this one rather than this one. Because if I wait to that one, then the chances are it's gone and I miss the entire trade. If I'm clever here and give it a minimal stake, put my stops out of the road, so well above the trend line, if you like, maybe here, maybe even around about where I've got the first entry. If I'm prepared to put my stops there and get them well out of the way of that, then I think I've got a reasonable chance of getting in both trades, and then I can load up. But this is minimal stake. That's kind of maximum stake area. So that's the point I'm trying to make, I guess. So hopefully some of you guys are in that, and hopefully it'll just continue to fall. Now, euro dollar. Interesting. Exactly what I was just talking about on euro pound is kind of in existence on euro dollar, because we are at a horizontal level here. We're challenging that. That trend line is on a 4-hour chart, so there's a bit of a confluence there, and I'll go to the 4-hour chart. I'm kind of ready to trade this short again, but exactly the same circumstance applies here. I've got 2 pivots, daily pivot, monthly pivot, so a strong support area at the moment in confluence with this trend line. So the only way I can trade this short is as a false break off this trend line, or wait for it to get up to there. Why? Because I don't want to trade into these pivots without profit. But if I'm up here, I can do that. I can trade into the pivots without profit. Now, this level, sorry, not without profit. I'll have room to take profit. That's the point. There's a level there also, which has been support and resistance. Interestingly, I went short there at that time. I remember that trade. Got a TP1 only, and then whew, off like a rocket. It was just a little bit early into that, but we got it back. Don't worry, not an issue. So same applies here. If I am to trade this short at this level, the only way I can do that is for this to break, allow me to find a resistance level of some kind. Maybe it's just here. Get back underneath the trend line, but not only the trend line, the pivots as well. So I've got to take them out and then retest maybe the confluence of monthly pivot and trend line. That would be my trigger to go short. I cannot short this market until that happens. Better trade is definitely off this trend line. Same scenario, break, find resistance, back underneath, retest, enter here, take profit before these two, and then let the rest run. So that's euro dollar. I think I'm still bearish, Ash.
On euro?
Because, yeah, I can't see a reason not to be. The only hiccup here in the trend on a daily basis is this low here. It's the only potential hiccup. Everything else is very fluid and very rhythmic, and higher highs, higher lows, higher highs, higher lows. Sorry, lower highs, lower lows, etc., etc. I don't think I could trade this anything other than short until we at least break this trend line. But even then, I'd still want to see this high go, I think. So I'm still a bear on the euro at the moment. We shall see. This, mind you, this cross and anything that's trading against the US dollar may not be anywhere near this area tomorrow at this time due to the FOMC statement, whatever that contains. If it's completely cut and paste, then maybe there's not too much going to happen. But you've got to think that there will be a reaction either way.
Mm.
Unfortunately, I normally trade this, well, I like to trade this as a breakout, Ash, as you know, but I think the range that I've been given isn't a range at all. Just explaining to those of you who don't know how I trade the FOMC breakout. I like to trade the breakout of the first 3 days of the week. So Monday, Tuesday, Wednesday. And I'll put a barrier around that range and trade it as a long and a short at the same time. But there is a proviso. Price has to be in the middle of that range before I do so. It ain't going to happen, I wouldn't think. If it does, and I've got a setup, then I'd probably be on top of whatever's going on anyway, because there'll probably be a short on offer. But I wouldn't like to trade this as a breakout, given that it's really not a range. It's a bit of a rally, to be fair. So I don't think I'll be trading the breakout this time around. So that's euro dollar, Aussie. Not dissimilar in many ways. The one thing about the Aussie I thought was pertinent was the fact that we really haven't broken down, despite trying many, many times at this level. As you can see, I've got the level just a little bit above where these lows are, but you could very, very easily, let me go a bit tighter. You could very easily expand this down to that area there. And when you do, you get the very strong picture that no time has this broken or closed below this level at no time. And this here on the 22nd or 3rd of December, I think I said this yesterday. I'm not sure what show I was in, to be fair. It was the second last day of the year. That's right, the 30th, or was it the last day? It might have been the last day. Second last day of the year. Where for some weird and wonderful reason, somebody in China said that Australian coal exporters are not allowed to unload their coal at our ports. And not surprisingly, the Aussie tanked in a heartbeat, but it was later proven that that was fake news. And that's interesting, because not before nor since have we had a close below that level, which of course is bordering on the 70-cent mark. And yeah, it's a bit above the 70-cent mark. 70-cent mark is right about there, pretty much at the low of this candle. So that's significant. There'll be a lot of pundits willing to line up and tell you that the Aussies belongs, should be, all those sorts of things around about the 65-cent mark, even the 60-cent mark. I've even heard 50 cents a few months ago. I don't see that happening, to be fair. I can totally see 65. That's definitely on the cards. But at this point in time, there's 65 around about here. So I can totally see that if this breaks down. But if you take a look across here, you know, since June of 2015, we haven't been below this level. We've tried, but we haven't been below this level. So for now, I've got to think this level's holding until something happens from probably a fundamental point of view to suggest otherwise. Now, we've been in a real estate bubble, according to a lot of people, and that's burst in the capital cities in Australia, I'm talking about only. But that's been going on for more than 12 months. And if this burst bubble was enough to drive the Aussie dollar below 70 cents, one would have thought it would have happened by now. I would have thought it would have happened by now. Couple that with, you've got a Reserve Bank saying that, and they've been saying this for 12 months, saying that, well, maybe not 12 months, maybe 6 months. They've been saying that the next move in interest rates will be down. In fact, there are people factoring in right now, economists factoring in right now, an interest rate cut as early as next Tuesday. I don't know if that's on any forecasts at the moment, but take it from me that is the chat around the place. Not
Wow,
everybody.
that's pretty. That's right in the headlights, isn't it?
Yes, it is. It is the chat around town right now.
Wow.
Not everybody, as I say, but there's conjecture coming out. So I would anticipate there'll be, if that news actually gets into mainstream, I would anticipate that we will break this level.
Yeah.
And that's the kind of fundamental stuff I'm talking about. But until it does, and if it does, I've got to be a buyer. But I hesitate to be a buyer with that knowledge I've just imparted to you. It's tough to be going against that. And, the minute it does hit the headlines on a worldwide basis, it's buy Aussie. It's definitely below 70 cents. If they are going to cut interest rates next week, then it's definitely below 70 cents. And 65 is definitely in the picture, if that's the case. So that's all speculation at the moment. And just letting you know, there is a whisper around the town that there may well be an interest rate cut as early as next Tuesday. The general consensus is that won't be the case, of course. That is not general consensus. That is just a few people having a little chat in the background. Okay, so take that as you will. What else is going on? Aussie yen. I was one of three things I've been disappointed with in the last few days, and this is one. Ash, you were on top of this one, but I was waiting. Sometimes waiting does deal you out of a trade, and this may be one of those times. It may not be. I saw the retracement level on the Aussie yen trade that we took the week before last, and we closed here at that white line. I saw the retracement level on that move as being deeper than this one currently or was hitting the weekly pivot. And I was convinced in my mind's eye that I knew today that the monthly pivot would move. And I knew it would move not that far away from the weekly pivot, but enough above the weekly pivot to make a difference. And then, therefore, I was prepared to wait till today and see if price could actually rally to the monthly pivot and give me a far better lower high once we've got back into the range, which is exactly what I like to trade. One thing I haven't done now that we've got that monthly pivot in place is pull a Fibbo on it. Look at that. Bang on, 38.2 retracement. So I'll maintain that stance. And if this even takes a few days, but with FOMC, you never know, it might just happen any old time. I will still wait for that to happen, and if it does, then that's where I'll look to short this market again. I hadn't pulled that before, so that's good. That's a little bit of confirmation. Not that I'm a Fibbo fan in any large degree, but if I can see a level, then I'm happy to say it coincides with. Yeah, that's probably there as well. Okay. I'm not disillusioned by that. That's all good. So I'm waiting on Aussie yen, and I think that would be a good short if it comes up. The other thing I was disappointed with was missing dollar yen short because I thought it was the turn of the bears, frankly, and no other real reason. I was looking for this spike. In fact, I was looking for this to drive through here last week, and we got a bang, but we got a whimper shortly thereafter. It failed to break out of the high side of this range that we've been sitting in for a while. It's now potentially failing to break out of the low side of that as well. So it's not. It's really not a sure thing. Well, there's no such thing, but it's really not a clear picture here as to which way this is going next. The one thing I would say is that it is a clear lower high. And that bar is interesting. I hadn't looked at that on the weekly chart. That bar is interesting. So I think on the basis of that, I'm probably a little bit bearish. I wouldn't say I'm totally committed to it because, again, we've got a trend line up here that hasn't been tested. Can you get the picture, guys? I'm in no man's land on many of these. It's not a market that I'm seeing crystal clear as, okay, I've got to trade this and I've got to trade this in this direction. It's really not. And that's interesting.
Well, the FTSE has actually tanked early for the first 15 minutes this morning. I'll quickly bring you the chart of that. And that does leave things maybe slightly confusing, but we're probably looking for the shorts at this particular stage. I'd love to see what happens with this particular hourly bar. But if we consider what we've got on the 15, which is really the only bars we have right now, then it would suggest that they might fail here, and this hourly bar might be down here by the time the hour is closed. And considering what's going on in the rest of the world markets, the FTSE seems to be a bit of an underperformer. So we broke to the downside. There was a gap here that we can see probably clearer on the hourly that has been closed. Maybe that's what it needed. But I think significantly, we're under this trend line, and maybe even more significantly, it starts to bring this head and shoulders kind of back into play. The move to the upside at this stage doesn't look particularly likely, but there are numbers due. We've got UK manufacturing due at 9:30. We've got the FOMC obviously at 7 o'clock, and that may be the clearest picture we have right now is to kind of wait on this, but certainly looks pretty weak so far this morning. I'm just going to have a quick look at the numbers under the hood and see what that suggests. Jay Sainsbury's reported profits better than expected, so one of the stocks is doing pretty well, but that might not be enough to bolster this this indice. Let's just check under the hood. So UK market has opened up, and it is currently, well, maybe not currently, but it's certainly opened up. Well, 43% of stocks are in positive territory. The rest of them are all negative. So 57% are to the downside. Not not a huge number by any stretch, but you can see that currently the 15-minute price action is suggesting it's struggling to get above this resistance point. And it didn't quite test this level, but that level might be slightly lower. So let's just bring it down to this low here. It still didn't quite touch that level. So it hasn't really tested that point just yet. But if it tests and fails there, then it would suggest that we may well be in for some drifting to the downside before the manufacturing numbers come out of the UK. The manufacturing numbers to this particular point have been pretty good, actually. They're looking for a little bit of weakness and a bit of softening. Maybe that softening does affect the FTSE. It may well affect the pound. Overnight, we've had Labour come out and and say that they would back a second referendum if no changes are made to Theresa May's deal. So they've sort of put the ball back in Theresa May's court, and they are now going to run their European election campaign off the fact that there will be a second referendum if there is no general election or a change to the deal with Theresa May. And I suppose what they're saying is that the no deal is better than the bad deal. Is not an aspect, and what they're effectively saying is that no leaving is better than a bad deal, which is really what Theresa May is probably offering them, because Jeremy Corbyn is so keen to get this customs union alignment with the EU through that he probably won't bend on that. I think he's probably going to be quite strict on that as the reason that he would do a deal with Theresa May's government, and he probably I would have thought he won't renege on that, and the Labour membership are very much in favour of a Remain. They're certainly in favour of a referendum. So he is bent on that a little bit, and that could be what's bolstering the pound. We've seen the pound across the board have a lot of strength recently. The first 15 minutes have opened up to the upside. which also, could play an aspect in the FTSE 100 where the rest of the world market seems to be doing pretty well. The FTSE does have the pound to contend with, so any strength in the pound could actually be the nail in the coffin for the FTSE as the other markets move forward. I just thought my charts had frozen up there because we didn't get some movement for a few seconds because it was so excited at the start. It was so excitable at the start the way that the markets open that I thought maybe my charts had frozen. But yeah, it looks like the next 4 minutes may well be key. Difficult bar, this one, because it is actually a reversal bar in many respects, or a buying bar, but because it's going to exist under this particular area, which is where the gap has held, it could well end up being a bit of a gap and go. So it gaps to the upside, it gets under the gap. I suppose almost slingshot territory. So I guess there's probably going to be some orders under this point here, and that may well drift us lower. The problem with that particular area is, again, the pivots, which don't exist too far under that point. So that's where we are right now, mate. Just a bit of a kind of wait and see zone, a bit of a wait and see area. The fact that the FTSE is not in agreement with the rest of the world markets is, I think, a little bit concerning. Does it go before the rest of them? Does it weaken off other factors and aspects? And certainly right now, it looks like it's going to be weakening on other factors and aspects. So a strong number from the UK will help bolster that pound even further alongside those Brexit negotiation whispers. But maybe a weak number could give people an opportunity to go long on the pound. And that may be the best play actually today, is that anybody that's looking for some retracement, then a weak number might just about provide that. Thinking about the pound versus the euro, that could see euro pound up at the daily pivot before those numbers are released, or even after those numbers are released. But I would suspect if the big picture about Brexit is the thing on people's mind, then we're much more likely to continue to strengthen with the pound. And that could be very difficult for the FTSE. It could be curtains for the FTSE today because of that.
On your FTSE charts,
yeah.
I think you were on a 15, might have been a 5-minute chart actually.
Yeah, 15, yeah.
Where you've come back below your trend line.
Yes.
And the current candle, which has got not long to go.
Yeah.
No, bugger. There's no retest. Yeah, if is that the 15, is it?
Yeah.
Yeah, if that was a nice bull green bar that hit the underside of that trend line, would have been nice.
It would have been good, right? That'd have been a good area to go short. I completely agree with you. The fact that we've rejected an area close to that, though, I think is probably quite telling, and it does suggest that we're probably going to get some lower prices here.
It do. Unfortunately, not a setup for me. And I must remain true to my setups. It's as simple as that. Wow, the pound looks like it is on fire. And I'm not too sure where that's going to stop, to be fair.
Well, it may well stop. As I say, it may well stop at the data. News and data coming out. That could be the nail in the coffin. The opportunity to get long on the pound against some of these currencies. Probably not the dollar. The dollar seems to be doing okay, doesn't it? But against the euro, certainly.
Yeah, the euro is looking to break as well. So there's something going on. I don't know if Brexit's really a factor there. Dollar's coming off dollar yen. Well, I've got to have a look at that. Let me have a look at that chart.
Yeah, go for it.
That looks almost compelling. But again, there's a bloody pivotal issue. Ah, dear. You can see where I'm coming from here, I believe, where we've had a break of this trend line, and we've now had a retest of the trend line at the confluence of the new monthly pivot. Ooh, that looks pretty saucy to me. It's also a horizontal level. It's going to be hard not to trade that. What I'd really like to see is a close below the daily pivot, I think. Although we've already broken the daily pivot, I don't know that I'm that concerned. Let me have a look at the smaller time frames. Yeah, daily pivot to price, not price to daily pivot. So we've had a break, but we haven't had a retest. So I really need to see this candle close below the daily pivot. And if I did, not this candle, but the 4-hour candle, if I saw this candle close below the daily pivot, I would place a short underneath it with the stops. Yeah, probably don't need to go too much above there, because if price gets to there, we're completely wrong. That's your wrong price right there. If it gets back above that trend line. Hour and a half to go. It's a bit early to call it, but definitely if this closes below the daily pivot, this current 4-hour candle, I'll be in on that short. A lot of people are already, I know, but that would be my join point. Spoke about Aussie Kiwi earlier. There's no way that I can jump into that. Sadly missed by me. Not missed because there was no opportunity, but that's the way it is. Now, going back to cable, what have I got here? That's what I've got here. No retest and just taking off. I don't see anything to stop this, apart from your news, as you say. There's a level in there somewhere. Yeah, this can go to 131 easily, another 45 pips away. So if you do get the opportunity for a retrace here, Ash, it would need to be a big one for me to trade it, because we've got an untested daily pivot way below price, and an untested or unretested, if you like, trend lines. So it's probably a trade line rather than a trend line, but it would be very, very difficult for me to go long here.
Yeah.
Very difficult. Price is oversold, or overbought rather, or certainly overextended. I don't know if it's overbought, but no, I couldn't go long here. I'd have to wait. And the retracement to daily pivot makes that different, of course, but until that happens, it's a no from me.
Yeah, well, bit of a no from me right now as well. Do you know what's I find a little bit fascinating as well with this FTSE is that if we look at this on a 4-hour chart here, then it probably gives us a slightly different dynamic, because the 4-hour chart is to a degree, I mean, it's a bit trapped here, but we have seen some lower highs, and that so far the lower high area is holding here. So for this to go long, is going to have to take out this level, and we do, this is the thing, we're in a bit of a this is the range that we kind of have with the FTSE, and it's making it kind of tricky that we got a bit of a box range here, but we could see ourselves all the way back down here again at some point. Now I've just got to measure this this right shoulder. Difficult to know whether the right shoulder is here or here, but let's take it from the extreme. Yeah, it was 50. Now that would suggest, yeah, really to the end of the line. That sort of suggests, next week that that if price hasn't broken out this level, that we're much more likely to see the lows retested, maybe with more significance. I suspect that will be the point that people get a little bit more concerned about the market rally continuing to the upside. Really, for this to drive itself lower, it's probably going to need the help of the other markets across the world, and the moves to the upside in the S&P and the Dow and the Nasdaq may well be false. They may end up being false breaks. But right now, you just have to say that the strength to the upside just doesn't seem to be abating, and probably most significantly is that we've tested lows on this, and we continue to sweep them aside and refuse them. But then, by the same token, that there's obviously some distribution going on up here. That there are shares being given up at these particular points. So it really does mean that we're probably in a bit of a waiting game. Probably the safest way that we can look at this now is a break above this point to give us a long, or a break below this point to give us the short, because trading within this range, you have to come down to shorter term timeframes, and the range is only, well, it's 60 pips, which is a daily range anyway on the FTSE. You know, the FTSE is the average true range is around about 60 pips. So just seeing us down here doesn't really kind of suggest that we're going to get some further follow through. It could just be you know, the range for the day, and then it could pop back up and pop back down, and we could be caught out here. So might well be worth just holding on to our hats for a little while and allowing things to break out and see which way this trend is breaking. Maybe even a strategy to you know, put a buy stop here and a sell stop here. You know, that's another way to potentially play it. But the problem with that is that you know, if we'd done that in this particular point, thinking that this is our range, then we would have been taken into the trade probably by now. We probably would have been pipped in and moving against us. So yeah, a little bit tricky, mate. But we're probably going to need a bar which actually closes in one direction or another to really help us out here.
Yeah, I can't see why either. As soon as I see your chart that looks like that, I have a look and I think, wow, that looks like my territory. But then I try and put a ring around it, and I don't see anything that really is enticing. Yes, I see the range, but I also see long legs, and I see deception when I've got long legs. That's a bit of an issue for me at the moment with this chart. That said, if I show, no, the pivots are going to, no, there shouldn't be an issue. I'll show you what I'm thinking. But you know, it only played my way, not played any other way. So the box that I'm looking at is probably in here somewhere. A couple of equal highs. Let's make it that level. Probably in there somewhere. You could probably tighten it up a little bit if you wanted to and count those false breaks. I'm happy to go with that. Weekly pivot's about right. So what we've done is we've come off the top of that, the rectangle, off the weekly pivot, down to the daily pivot. Any retracement here, in particular, probably to just below the weekly pivot, match these highs and give me a lower high there. That looks good to me, to go back to the bottom of the range. Your issue, of course, is the fact that you've got a daily pivot here that's been rejected twice, monthly pivot that's untested. Naturally, it's only the first day. That shouldn't be a concern if you can enter here, because you can take profit here and just let it see if it'll go through the monthly pivot. Shouldn't be a worry. So get yourself safe in the market at that point. So I'm not suggesting take a minimal amount off. I'm suggesting take half of the trade off before you hit the daily pivot, and then just let the rest run down here. Move your stops, of course, so that you're safe and you're free trading. That would be a plan.
Yeah,
I'd be able to go with that.
Yeah,
but you've got to be prepared to take profit. See, and that's the key when you're trading inside ranges. You have to take profit, because you're going to hit resistance or support inside that range.
I suppose this is the thing, because we're seeing this with the market, and nobody should get disheartened by this, because actually the market is a lot easier. It's a lot simpler when things are trending. You know, you can just spot the trend and or use the filters. You buy or you sell depending on which direction those filters are suggesting, and then you leave the trade and it just starts to run. But this is quite a disheartening period for many traders when the markets pause, because the picture just becomes really unclear. And there's only really two ways that you can handle this. One is by using a strategy which trades ranges, but you've got to be on top of the fact that that the market is going to be ranging. But the other one, obviously, is just to wait until the market starts trending again. And you can always find markets that trend. Obviously, you know, when things are ranging, then other things are trending, and the pound is a really good example of that right now. The pound has really started to take off to the upside. Very, very difficult to get into this one. I don't see any retracement, which would suggest that most strategies would probably be negated at this point. But you know, looking at the pound, the fact that you've got a trend line break on the daily chart, and that is a significant break, because this has been moving to the downside for quite some time. And let's just see what the pattern actually is here. Yeah, it looks like something of a descending triangle, and that really does suggest that that the move to the upside in the pound has really got some legs here, way beyond the highs. Well, you'd probably aim for the highs. It's not that far beyond, but you'd probably be aiming for the highs. So any strategy really should be looking for the pound to get up to 133.75, maybe slightly below that at 133.40, and that does leave plenty of room. There's 300 pips on offer here, but trying to get into this at this particular point is not possible. But what it does tell us is that with a breakout of this particular pattern, any retracement is going to be well worth taking. So so wait for it to come. It's unlikely. It can happen, but it's unlikely that it just would push to the upside without any significant pullback of some sort, or a pullback of some sort, I should say. The significance is not really known at this stage. Maybe
I think we're still on my chart, mate. Sorry.
Oh, sorry. Okay. Let's bring this in here. Here we go. Yeah, so let me bring this in again. Draw the lines, because this is a significant breakthrough with the pound. And as I say, while we're trying to find things that are trending, you don't have to go too far to kind of find this one, because it's a beautiful break. That's a lovely line down there. And yesterday's break to the upside was significant. This is exactly the kind of bar you want to see. You know, a bar which just tips above just a little bit doesn't really give you a clear indication, but that is a clear indication. That's shouting very, very loudly that that the pound has broken now to the upside. The rest of the pattern kind of comes in here probably. So that gives us that descending triangle, and the measured move will go from the top end to the low, and that would suggest that from the breakout point, which is here, there is plenty of room to the upside. And as I say, aiming for this point up here might be a little bit ambitious, considering the resistance point here, and that's what I'd aim for. What that does tell us is that the measured move of the triangle goes way beyond what would be a significant point of resistance. So that would give us potentially 300 pips to try and grab some of to the upside. So you're just waiting for a retracement. Now, there's no point in getting into this, because the retracement might come all the way back down here and then give you a really nice price. And the only way that you could justify trading that is if you're willing to put your stops all the way down there, or maybe somewhere under the trend line. But then you might have a slingshot set up, and then you've missed out on a really good trade. So this already tells us that this should be on high alert. I don't know what the indicators suggest on the strategies, but this is telling us high alert for the pound against the dollar, and it could be FOMC suggesting that there's a dovish stance, which helps all currencies against the dollar push to the upside. It may well be that is coupled with a Labour push in the European Union to remain in the EU, or even have this referendum. And as that referendum becomes more likely, that the pound would strengthen off the back of that, because there's no doubt about it. The whispers in this country are, if there's a referendum, we are probably going to vote to remain the next time round. So if that referendum starts to become likely, then the pound will push to the upside. I'm not saying that's what's done this, but it appears that that's what's the case. But the takeout of that area and the takeout of this area doesn't really provide. You don't need to be provided any more evidence that that this is a market you should be looking for opportunities to go long on. You know, you don't need indicators to tell you that. A nice clean chart, a nice clean break of an area, and just waiting for the pullback will be enough. So how you get into this is now the question, and you can break down these charts really as much as you like, but it's not going to give you an opportunity, because the 4-hour chart has gone. And apart from this this potential for a bull flag, which most people wouldn't be trading, that's not really an opportunity. So most people are going to be waiting for a pullback to this level of somewhere along this line. I would suspect if it comes back to 130. Yeah, so 130.13. I don't know if there's any pivots there. Let's have a quick look. 130.13. I'm going to have to get rid of these lines because they're not going to appear on the next chart. Yeah, monthly pivot is providing that, isn't it? That's going to make it tricky. Yeah, you see, so the daily pivot is the area. That's the area to look for a long, but whether we see that or not, I don't know. But that's the point that you're looking to go long. And look at these indicators. That this the fact that this is embedded just tells you that this is an indicator which is not going to give you any kind of read now. So you're going to have to trade the price action and probably hold your nose a little bit. I would look to try and trade that long there, maybe stops at the lows just to kind of give you enough room. That's 100 pips, but remember, we're really aiming for 300, and actually if it comes back, then you're aiming for slightly more than that. So it could be a 3.5 to 1 trade, even with a 100 pip stop. So looking at the daily pivot would be certainly the area that I'd be looking at putting an order in place.
Okay, mate, no argument. I think that's pretty much the conclusion I came to before. Another conclusion that I have come to is that maybe the pound going long is a combination of both the things that you mentioned before. One of them being that the market is looking like it is waiting for a dovish Fed statement. And I'm seeing that very pronounced across the board here, given sure my screen is not
yeah I mean, do you know one thing on that before you start, mate, is gold.
Yep.
I mean, you know, the trade on gold was certainly an opportunity to go long, but actually as things stand right now, I'd be kind of interested and much keener to try and take this trade off and allow things to become a bit cleaner, because this is very, very scruffy.
Yep.
That lower highs, I mean, that becomes hugely problematic. And I'd be, as I say, I think trying to get the trade off, it's not too far away from break even now, but I'd be much more interested in taking this trade off, because it's just not really happening. And then let's use this trend line as well. You know, we're under that point as well, so I'm not quite sure what people are doing, but I will put a call out to take that gold trade off, because I don't see this one. I don't see this one going in the direction that the rest of the market may well do with a dovish statement right now. I mean, it might fly from this point, and it will seem like a bad decision. But actually, if we're trading fundamentals and technicals alike, then we have to respect the fact that this technical pattern is broken to the downside. So trading gold to the upside is no longer an option. And there was around about a 5 pip stop loss on this, and it's about 1.5 pips away from entry. So anywhere from here to entry point, this needs to come off the table right now.
Okay, mate, you want to send that out? I mean, we all knew that this was a retracement or counter trend trade. All knew that. I waited, and I was going to put my entry here, and I, for some unknown reason, was told a little voice in your head that goes, "Don't do it," is ringing in my ears. So I can't give you a great explanation as to why I haven't taken this trade, but I haven't. The overall is very, very clear that we're trending short, though. And the reason I wanted to go long was this trend line, and in confluence with the monthly pivot. That's now changed, of course. And the monthly pivot is now potentially offering resistance right now. So I can see why you'd want to take it off. Absolutely.
Yeah.
Okay, going back to where I was, or where I was about to go, we're seeing this is the daily today relative performance against the US dollar, and you can see that the pound is outperforming everything else. Aussie, Euro, so the majors are really coming to the fore here. This is the G7, of course, G7 currencies. And the only hapless pair are the yen and the Kiwi. Kiwi, of course, because of their news this morning, which was poor. And the yen, for reasons best known to other people. I don't know why the yen's underperforming at the moment, but stand by, that may not be the case forever. We just don't know at this point in time. So, conclusion that I draw so far today is that we are expecting a dovish, or the market, sorry, is expecting a dovish statement out of the Fed. Whether that continues or otherwise is a completely different story. You've got to bear in mind that we wait for the US session to open before we get the Fed's news, of course, and well before. So they've almost got a full day of trading before that. It's not unheard of that this turns around.
Yeah, I mean it's a full 10 hours away, isn't it? Really, before we get that Fed statement. So so there's a lot out there, and in actual fact, aside from the pound, and I haven't looked at all the other charts, and but aside from the pound and that little bit of management with gold, I'd be happy just to shut my charts down until probably tomorrow, actually, because at 7 o'clock you get a couple more hours of trading, and then the market is wrapped up for the day. Certainly the futures will be closed at that particular point, and the US market will be closed also. So might be worth waiting for an opportunity tomorrow instead. But I don't know about this Fed statement, mate. I mean, obviously, it's one of those ones that is so obvious and telegraphed for dovish statements that it could just bite people, couldn't it? Everybody's positioning for that.
You said earlier in the week, or was it last week, when we were talking about it, and we said that the numbers coming out of the States are pretty good, and I know we've dug deeper into those numbers as we did on Monday, and they're not as good as the headlines. That's been established as well. But if the Fed were to turn around overnight and say, look, we're still not intending on raising interest rates today, but the numbers that we're seeing at the moment are pointing towards a rise rather than a cut, that may be enough to turn this, what is supposedly, as we've just said, the market expecting a dovish statement. It may just be enough to turn that around.
Well, what about the midpoint? I mean, if the market is expecting a rate cut and it gets a rate hold, then and further statements that suggest that they'll be watching the markets from here on in, could that also be enough to derail the movements to the upside?
Absolutely. Anything can happen.
Yeah.
We know the market is very emotive around those times, and spikes happen very, very rapidly and very dramatically. So yeah, I'd be expecting anything and be disappointed with nothing, frankly. For that reason, I don't want to be in the market unless I'm safe in the market at that point in time. And I'm not the same as you, because I do see opportunities, and as soon as I see price running away from an untested daily pivot, I start to pay attention, especially on the euro, because I know the numbers are very, very strong in the opposite direction. And then I look deeper and I see didn't happen the day before, didn't happen yesterday. I start to get excited because the numbers are really stacking up that this daily pivot will be tested at some stage today. So I really like to see the euro take off up to here and look for that play that I was talking about earlier. Let it hit resistance, come back underneath and retest. So I'd have to be up fairly. It depends on when it happens, of course. If this is taking off as it seems to be, then we could be up here in a couple of hours' time. So by the time the US Open gets to us, could well be back under here and retesting. And if that's the case, I've got probably 35 odd pips to take out of the market.
Yeah.
Perfect.
Yeah.
That's exactly what I'll be looking for.
Yeah, absolutely, mate. Absolutely. Yes, it's certainly a possibility, isn't it? That gold trade is literally a pip away from entry now. So because it's on a little bit of a rally, it might well be just worth waiting to see whether this is going to go high enough. And it's just broken out of a 15-minute range here as well. So I have to be aware of this point here. Yeah, there's probably not a lot of room. It might not get to 1282, but literally a pip away. So there was a 5 pip stop loss. There's only a fifth of a risk on this one now. So I would comfortably, happily say just take it off. Don't don't mess around with it. It's broken back to the downside. If it breaks the upside, it's just going to be one of those things. But a good decision is to take this off the table because of what the technical patterns are suggesting. You are relying on hopium if you are looking for this to break to the upside, and even though hopium can give you a high, it may well give you an extreme low. So I think better to just to look for an easier opportunity.
Yeah, those overdoses on opium not too good, mate. That's a fact.
No, very true. So
the other one that I'll leave you with is this one. But I'm now starting to get a little bit fidgety about it. I still place the trade if I see it happen. So if this closes below the daily pivot, as I said before, this is dollar yen, and it's 4-hour chart. It's got an hour to go. If it closes below the daily pivot, I think there's a short on. It depends on where, of course. If this were to be an extremely bearish bar and got down near the lows, all bets are off. But if I've got a candle that looks something like, let's say it closes there, risk up here, so 15 pips, and I've got pretty much that before the lows, that would be okay. If I impinge on that further, so if I were to engulf this bar, for instance, I'm too close to the lows to trade it. So that's the caveat around that one. But it would look good if it closed about here. We shall see.
Yeah.
But yeah, daily pivot test on the euro. If we can get up to that that bigger and longer, stronger trend line, I'd be more than happy to take that. And that's where I'll leave it. Euro pound still running, of course. That's settled in for the afternoon. By the look of it, it's just waiting on FOMC, I would think. But which way is it going to go? Euro, pound, euro. Who knows?
Yeah. Yeah. Well, the other thing is that manufacturing data as well, which is on its way pretty soon. So yeah, half an hour we get some numbers out of the UK, which may well just hold these markets up for a little while. But let's see what happens with that one. I'll finish with the FTSE 100. The FTSE 100 continues to ease to the downside. It's kind of it's held its level here, but it's easing to the downside. Pretty negative start.
Chart again, mate.
Hoping you've got my chart. Have you not got it? You got it now?
Yep.
Cool. Yeah, the FTSE 100 continues to ease to the downside. This area is kind of untested, so we'll see what happens there. A little bit more detail here on this one would suggest that the daily pivot will probably provide a bounce, but the monthly pivot is the area to look for the long. And really, you do still need to be on the long side, even though this looks negative. There's nothing suggesting at this stage that this is going to get washed out off the back of just some conjecture from what happens with the FOMC. Yes, it can happen, but I would suggest that if we come down to this point, then the buyers are going to be really kind of keen again to try and get back into this market, and that's probably what I will be doing as well. So I am looking for a price of around about 73.60, which is 30 pips away from now. So if you're looking at cash, then you're looking at around about 74.10 for a trade to the 74.10 for a trade to the upside on the FTSE 100. I think that area would be a good area. If we bring that on a 4-hour chart, it kind of looks even more likely as well, because you then have this low here. So there's some confluence here. So look for the long in this point, and there's a chance that we're in a range. And if we are in that range, then we just pop forward again, possibly to the weekly pivot, and then that's a point to start thinking about taking profit. So we're looking for a 30 pip dip here, and with a 30 pip dip, we're looking to go long. So that's the idea right now. We have to stick with the longs at this particular stage, even though there is a big picture which suggests a short, and it really does suggest a short. But for right now, we're probably safer. We're on the safer side of the fence by going long and looking for the longs in this area. The other area to go long, of course, is if it breaks to the upside and pulls back. So that is the plan.
The older I get, the better that safer side of the fence looks.
Yeah, absolutely, man, and that's the thing. This long is a safe thing to do in many respects, and the reason for that is that and not everybody will want to trade this way, but because of the way that I will look at it, I look at this area as a pretty strong line. It is just above that point, but there's certainly some support there. It became resistance. It became support. It's become support. It's become support. So it's a really strong level, and the monthly pivot is there, and it will be the first test of the monthly pivot. So that is a strong reason to look for the longs in this area down here if it gets there. And if it does and breaks out, then the likelihood is it will probably retest, and then you can take your trade off the table rather than anything else. So longs at that point probably stops at this low down here. Slightly beyond that, so I'd give it some room between this point and the stop, just because that would provide a potential bounce, but it may not. It may come even further down. So you might need a fairly wide stop, but you're really looking for a bounce back up to the weekly pivot before taking profit. But yeah, all about the monthly pivot, I think, for me, mate.
All right, mate. A little bit sad I can't give out the FOMC breakout trade, but unfortunately the market's gone too far to trade that. Next month, perhaps, or 6 weeks from now.
Cool. Good stuff, mate.
Even NFP on Friday. We might even preview that tomorrow.
Oh, cool. Okay. Sounds good. All right, guys. Well, thanks for listening. And I don't think, are you in the show, mate? Can you see any questions or anything?
No questions, just a few comments. Mark said it's better because he could see our screens.
Okay.
Good. Mohammed was laughing at your hopium trick.
Okay.
And a few other comments, but no questions. All good. Thanks, guys, for your input, by the way.
Yeah, always appreciated. We'll see you tomorrow, same trade time, same trade channel. Have a great rest of the evening for you, Jeff, and also for the rest of you. Have a great rest of the day. We'll see you tomorrow.
Uru, have a good one.